Yes. It's Sue for Steve.
We made it. We're live. Just a few minutes late as we try to get our technology squared away as we're new to streaming on multiple platforms at once. I think you guys did great.
Awesome.
We made it.
We're all here together. It doesn't look like anybody's joined us yet, but this broadcast will be played again and be available for play on YouTube and Facebook forevermore. So
that's exciting.
Wow.
It is. So this is a new series we're doing on a weekly basis, Thursdays at 1 o'clock, and we're doing a rotating series of conversations, not just necessarily about real estate, but about, basically all things home. Real estate is our business, but it's not the only thing we talk about. Next week, for example, we're going to be talking with Becky Bircher and the designers at a new construction studio. So it's real estate based, but design centered. Today, it's going to be fun. Let me start with introductions, because today we're going to be talking about the economy of the market, inflation, mortgage rates, and expectations for the future. So we'll start with why do we have Mari and Esteban? Stephen Thomas, Big Steve T. Holmes, joining us in the yellow today. Steve, why don't we start with you and introduce yourself?
I am Big Steve T. Holmes, Steve Thomas. Been with the team for a little over a year now.
Mm-hmm. And the area you work and live and play?
I live in Dallas. I live and play everywhere around Cobb and Paulding counties. And I work around those counties as well. Cherokee, Cobb, Bartow, you name it.
So one thing I would like to point out, because we may have national and international visitors to our site, the places we're talking about are in Georgia, United States. We are just north of Atlanta. So for those who don't know, Dallas, Georgia exists. It's not just Dallas, Texas. We have friends and referral partners in Dallas, Texas. So Steve's coming at you from Dallas, Georgia. Mari, how about you?
Yes,
Tell us about yourself.
I live in the Ackworth area. I've been in the real estate industry for 10 years. I'm relatively new to the team. I've only been with you guys for about 4 months now. But as I said, been in the industry for 10 years. Live in Ackworth, live and play all around, just as Steve does. We don't play together often, but we should.
You should.
Love Georgia. I'm originally from North Dakota, so this is a big change for me, but I absolutely love Georgia.
We're really glad to have you. How about the other two over there? We got Sydney Pratt and Kristi Laughlin.
Hello. Yes, I'm Kristi. I am the marketing and listing manager for our team, as well as a licensed agent. I also live and play in Dallas and all over the Atlanta area, and started real estate almost 2 years ago and joined the team about a year ago. So
awesome.
Sydney. And I'm Sydney. I am the social media coordinator for the Clareo group, and I also help Kristi out with some stuff. So I also do a little marketing assisting. And today I will be sharing the slides for everyone to talk about. So I am the button pusher for today.
Awesome. Well,
yes.
So we got the fun stuff going. Let's talk about the market. So we in our office talk often about mortgage rates, housing supply. The supply and demand conversation is big. I wanted to talk about this today because there's so much fear in the marketplace with the world being the way it is. There's a lot of unrest, a lot of turmoil, and a lot of, it is just fear of the unknown. And what we would like to share today and just talk about is that the history of the housing market, and we pulled data back from, we started in the 60s. I bumped it up to the 70s for our listening audience. Houses have been bought and sold in every market, in every and we have the data to show. So Sydney, why don't you go ahead and pull up some of the slides, and we'll just start talking about it and sharing our views on what's going on with mortgage rates, supply and demand, and the economy. All right. We got Keeping Current Matters is one of the places that we pull good data from that will help. Sydney, if you're able to make that slide bigger so we could see it, or at least me with my bad eyes, I love it. Can you click on it? So the market data that we're pulling is going to show, I think the first slide she's going to pull up will show us, and we can talk about. Does somebody want to say what's on there?
Can you see it?
All right. I think what we're going to talk about first is the buying power. We've got the difference that your mortgage rate is going to make your purchasing power with the threat of rising interest rates. We all know interest rates are going to go up this year. And what we pulled was some slides on what $400,000, what the monthly payment would be at 3%. Versus if it goes on up to 3.75, 4.0, and 4.25. There we go. Okay, that's
There we go.
that's the other one. And what the expectations are. So, Steve, why don't you jump in, because I know you have a really strong grasp of how rising interest rates affects sale prices.
Yeah, well, it definitely affects our the clients in our market, because the rising interest rates, obviously, if we have clients that are, maybe don't have a lot of wiggle room in their qualifications, as the interest rates go up, it definitely can have an impact. And so that's a great tool that we can use to ask, to encourage our clients to go ahead and buy now, because looking at these slides, you can see that, the payment will go up $200, $300, $400 a month with the rising interest rates. So, and I don't foresee them going down anytime soon. So it's a great time to get in.
What's interesting to me is the difference in the life of the loan. The orange bar at the bottom, $66,000 difference over the life of the loan. I don't think, Mari, you might want to comment, but I don't have a lot of people who stay in a home for the full 30 year. Most of yeah. So why don't we talk about that for a minute?
Yeah, the average person stays in their home, less than 10 years? So they're going to recoup that cost when they sell, the property. Just as you had stated previously, we've seen these prices and interest rates in flux for so long. But, we have to keep in mind that even when they are going to 4%, 5%, they're still low. They're still historically low. Granted, we had that time where it was, very, very low, but we're getting back to the norm now.
So I'll go ahead and admit how old I am now, not the number, but I'll tell you my first house that I bought was way, way, way back. And I did buy my first house when I was 20 years old. So I'm going to clarify that right off the bat. But my interest rate was just crested 10%.
Yeah.
I'm not suggesting that I'm would ever want to get back to that period. But what I'm saying is that in every season, people will buy and sell houses because we need a place to live. So
That's
Sydney,
just
yeah. Sydney, why don't you pull up the next one, the purchasing power, because that speaks to what Steve's been handling a lot of first-time home buyers. And he's just been excellent at breaking down and explaining to the buyers what the difference is, why getting your pre-approval fully underwritten with your lender in advance matters because of the fluctuating. We're looking at sale prices where maybe we have to write an offer that goes above list price or use an escalation clause at a higher price. So your purchase price is going up, in how your mortgage interest rate affects your home loan amount. That's a good one.
Yeah, this is a great slide.
Anybody want to talk about, oh, we can't see it. All right, so for our viewers, we are getting better at this video streaming thing. Good job, Sydney. Thank you for saving us.
We're working on it.
There we go.
Oh my goodness.
Yeah.
I think that slide though really speaks to, as Steve said previously, getting in now. You know, everybody's kind of afraid. It's low inventory. You know, we are seeing the rise of the interest rate, but as we can see, we don't see it looking any better as far as the interest rates are not going to go down for, you know, at least for the time being. So when we look at this and look at the payment at 3% versus 4.25, it's roughly $300.
Right. Which could impact, you know, a first-time buyer especially, or if you're in a community that has high monthly homeowners association fees.
Wow.
These would factor in. If you're buying a townhome and the monthly HOA fee is $200 a month, and because of a fluctuating mortgage interest rate, now your payment has adjusted $200 a month. That's a significant difference. You think, oh, I'm qualified to buy at this price. These are the factors that need to be calculated before going in. Steve, how are those conversations going with your clients? Like, because I know you have them all the time and you're doing a skillful job guiding them the way they need to be. What does that look like for you?
What's critical is having a good relationship with your lender and keeping that line of communication open, because literally in this market we're in right now, the interest rates are changing daily. And we're also in a limited inventory, so it's sometimes taking longer to get people into homes. And as the interest rates are changing, you need to be in touch with that lender and make sure that you know what's going on with your client, where they are from everything, from the perspective. It also weighs in, like you mentioned, you know, there could be other fees associated with the purchase, whether it's homeowners association fees, things like that you need to pay attention to, because these fluctuating interest rates could impact that.
Right. And I know all of our viewers and our clients expect us to have all the answers for them. But Sydney, if you'll click to the next slide, the home price forecasting for 2022. This was an interesting slide that I pulled. I got this when I was at a training conference. And what it does, it's the other one, home price with the bar. It's going to tell what the expectations were between the National Association of Realtors. I'm sorry, I skipped one. My bad, Sydney.
No, you're fine. Did we go to the other one? We can skip.
The next one was the forecasting on prices. Is every expert in the industry is predicting different percentage increases. So we saw in Cobb County, Georgia, an average 20% increase in 12 months, from January of last year to January of this year. So the experts are all being asked, is this going to continue? Should we expect a 20% price increase between now and the next 12 months? And this tells you what we're being told. 2.8% is what the National Association Realtors predicts. I don't think that is a strong enough forecast for what we expect pricing to be. But will it go as high as 7.5%? What do you guys think?
I think in certain markets it will continue to go to 7.4. You know, but
and that's Fannie Mae's. If you can't see that on your screen, that's Fannie Mae's prediction for home price forecasting.
I think it's going to start leveling off. There's no question. You know, prices can't continue to rise at the rate that they've gone. But I agree with you. I think 2.8 is too low. 7.4 is a little bit high. You know, ideally we'd like to see it somewhere in that, 5% range, 5.5.
Yeah, I think 5 to 6% has been a good average for a healthy economy. I don't know that I would be the person to call this a healthy economy right now, but I think 5 to 6% would be a tolerable amount
Mhm.
with the interest rates.
In the median market, I would even say that might be a little bit low based on what we're seeing with the sales prices of the homes that we're selling.
Yeah.
I think if we were to look at our particular sales, that it'd be right up there with that 7%. And again, that's a nice tool that we can use, that I use with buyers who sometimes may have to go over the asking price,
Mhm.
or maybe even over the appraised price of the property. I'm like, well, if you look at the home price forecast for the future, you're going to get that money back rather
Yeah.
quickly. So it helps them feel a little better about maybe spending more than they wanted to.
So that's a good point, Steve. So if they're putting an offer in maybe at a price that they feel is already maybe 5 or 6% over where it should be in their mind, we can show them with the expectations of the increased sale prices that over the course of really even the next 12 months, that continued appreciation won't hurt them as bad as they think it will. Is that what you're saying?
Yep, exactly.
Awesome. All right, Sydney, if you'll go back to the price inflation, there you go. Thank you. My bad. Sorry, I went out of order. So this is a slide that we pulled, the price inflation for housing since 1967. And I think it's interesting because what's strong in everybody's mind is that 2008 to 2010, where we can see the little blip down.
Mhm.
But overall, to me, I see a lot of stability there since 1980. What was that? 1982. It seems to be that we've followed a trend. Anybody have any other thought? I mean, I'm not an economist. I'm just looking at the data that the experts provide to help try to bring some calmness back to the conversation.
Typically, I mean, like they always talk about the ebbs and flows in real estate and how we really start to see something change roughly every, 5 to 6 years. We'll see that little bit of a dip and then we'll start going up. So we've been in that ascending market for so long that at some point, yes, it has to level off. It has to dip down. I think this is just the natural progression that we're seeing right now. That,
I think it's interesting that 1979 and 1981, 11.5%, 12.2. We're not anywhere near those numbers right now.
No.
So the conversations I'm hearing from people is that, oh, hair on fire, the sky is falling. This data, if you go back over the history here, 40 plus year history of housing index prices, and this came from the U.S. Bureau of Labor Statistics on Consumer Price Index. I didn't make this up. Like this is the real data where maybe we could all start being a little calmer about our conversations about what the expectation is. I thought it was interesting data. Steve, you always have an interesting take on the data. What do you think?
Yeah, I think that, like you said, I work with a lot of young people, first-time homebuyers, and so they weren't around during that blip. So they, a lot of them don't even remember or even know about that. But the people that I worked with that have been around, they do, they see the prices going the way they are, and they have bad memories of that time.
So maybe we should talk a minute about what caused that blip, that 2008 crash that we see clearly in the chart here, where pricing really did drop dramatically. For those of us, we all remember that period, and we know I wasn't in real estate at that time, but I was a buyer and I'm a business owner at the time, and I clearly recall that we all know that segment was caused by fraud within the industry, and maybe we should talk a minute to assure people why that shouldn't be expected to happen this time.
Well, I think the number one thing is the regulations that have been put in place since that happened. I mean, with the banking industry, that was a big part of it. People were getting loans when they had nothing, no collateral. They didn't. Some of them.
I got a signature loan. I did. I got a signature loan. I didn't over borrow though. What I was qualified for at that time was way more than I ever would have considered spending because I'm a frugal person.
Yeah.
And I was a self-employed business owner that basically just based on my credit signed on the dotted line, and I could have bought whatever I wanted.
Yep.
And that
And that was a big problem. That was a huge problem.
Thank goodness for my grandparents who raised me right. I have some more slides in here, but they are, maybe we should just skip to the last one because or the second to last one, the expectation on 30-year fixed rate mortgages and there you go. These are again pulled from where we were January 2018 to today, and then expectations of where they may be going. If by the end of Q4, will we be at 4%? I mean, we're seeing some at 4% now for clients based on their credit. I don't know. Any thoughts about that? None of us are going to predict what the Fed will do.
They're definitely on the rise, according to our mortgage lenders that we talk to every day. They're definitely on the rise right now. Whether they'll dip back down, I don't know. But I think that 4 is definitely in play today for a lot of our clients.
Yeah. I think that when we look back, people were, look back when they were at, 1%, 2% with just incredibly low. We haven't seen that in how many years, so I think that was the big blip right there. And I think now it's going to get back to where it really should be. We won't see the.
I think the 30-year average is still like under 5% is still below the 30-year average. So, but again, the conversation that we as professionals can bring to the marketplace is that a 4% mortgage rate with an appreciating market in that 5 to 7% range is not, the data shows that historically that's not crazy. Everybody's like, oh, the market's crazy. The market's crazy. The data really doesn't show that it's crazy. It's just after remembering back from 2010, and the suddenness of it, it seems like it. But what I really liked was hearing that the expectation for more homes hitting the market, because the low inventory is what's affects our work on a daily basis. We're writing offers. There's a lot of buyers, few houses. So Sydney, can you pull up the last slide on the home sales forecast? This was encouraging to me.
Yeah.
Because what I heard and what Keeping Current Matters was kind enough to provide a slide here that shows what the expectations were about new homes hitting the market. We have been in a supply shortage period for so long now that new construction is behind. We all know that. It's been tough. If home builders were to catch up at the rate that they're building by the end of the year, and we actually see 7.5 million new homes hit the market by the Q4, that will be sweet relief at just the right time. As mortgage rates goes up and appreciating prices continue, we might start seeing more homes hitting the market, which will balance out the supply and demand. You don't have to be an economics major to understand what that'll do.
Yeah, it's been a long time coming, that's for sure.
Yeah. Now I don't know, the builders I see, what you guys are out there, new construction's a different beast right now. We would all like to see builders release a few more homes. Any thoughts on the new construction market versus resale?
I don't think that with new construction right now, I think the biggest issue that we have is, just the supply and being able to get the supplies that are needed in order to finish that construction. Because a lot of the homes that are for sale right now, you couldn't build them for for what they're selling at. So it's a very interesting market.
So what I thought was interesting about this particular slide was that in 2021, the number of homes that were sold, it's very similar to what we're selling right now. It just feels busier because so many people want to move. I suspect this is still pandemic related, where people stayed in their homes for 2 years. People didn't come out of their homes. They wanted new homes, and now they do. But what we're seeing on the actual data, it disputes this idea that they're so like, we're not selling houses. We are. There's just more buyers that want to move, more people, more millennials. Maybe we should talk a minute about the millennial home buying market. All of a sudden, millennials are ready to get out of their parents' basement and stop renting, and they have cash saved up because they've been out of college for several years now. Kristi, you're kind of in this. You haven't talked much. You're kind of in this buying segment right now, aren't
Right.
you?
I am a millennial, believe it or not. I'm a millennial. Well, a lot of millennials too are selling their first homes that they started out in too. And so they're ready to upgrade a little bit. They're ready to find something bigger. They have children. And so they're ready to get out. And a lot of them, you know, had babies during the pandemic too. And so they have outgrown their house quickly. And so it's now looking for that family home, but trying to compete in the market as well. And they do have the cash saved up, and they do have that equity from their first home. And so they're ready to move up to that next price bracket too. So
yeah, it's interesting. Interesting factors that come into play. I think this was fascinating. So as we wrap up, my takeaway as I assembled the data to have this discussion is what I suspected. I think maybe the media and just the state of the world is driving fears that we as professionals can bring a conversation that's a little bit calmer, a little bit quieter, and a little bit more data driven to assure people, if you want to buy or sell a home, now is a good time. There's always a good time, but with rising prices, now might be the best time. And if we as your agents have to work a little harder, well, that's on us. That's our job, and we're glad to do it. So, do you guys have any closing comments about the data, or what you would like your clients and viewers to know about what you bring to your work that you do?
I think you said it best, where we bring that knowledge and that calming effect and help guide them through the entire transaction, making sure that we are looking out for their best interest and keeping them in mind. And I think sometimes people, because it's crazy when you're buying a house right now. So we're there to calm it down.
Calm it down.
Like
what about you? You're the most calming force when it comes. See, if you haven't picked up for our viewers, Steve is our data guy. He's our spreadsheet guy, and he's very much a calming force when it comes to the facts and the numbers. So, Steve, why don't you wrap it up for us?
Yeah, having this data right here and being able to speak to that and show people, like you said, the actual facts and not just what they hear. I had a first-time homebuyer consultation last night. The first thing I asked them is I said, what are you guys hearing about the market? What do you hear? And I was able to tell them a lot of these facts right here and assure them that we can get them in a house, even though what they hear is the sky is falling.
That's right.
It's
awesome.
I know.
We're still here.
Here we are.
We're still here. We still expect, more houses to sell this year than last year. And we're not going to complain about how hard we work, because we're glad to help our clients buy and sell the homes that they need and they want.
That's right.
So let me wrap up and say thank you, everybody, for joining us. This will be viewable on YouTube and Facebook for some time to come. We're glad to have these real estate conversations about the market, what's going on, and what the expectations are. You're welcome to send us your comments through DMs and questions for next time. We will be back next Thursday at 1:00 with Bircher Homes Design Studio, so we can talk about new construction and what's trending in design. Thank you, Sydney, for bringing that to us. And we're going to sign off, and we will see you on social in the future.
Adios.
Bye, everybody.